Hi, my name is Aziz, a fellow of the Association of Chartered Certified Accountants. Welcome to part 5C of the course, Bookkeeping up to Final Accounts. Today, I'm going to talk about two main things. The first one is the accounting aspect of payroll transactions, and the second one is account closure. Now, under the accounting aspects, I will discuss tax-free allowance, tax planning, and then the employment allowance scheme. Now, the tax-free allowance, or tax-free pay as they call it, is given to everybody who is employed under the pay as you earn scheme, PAYE. Now, in the UK at the moment, it is £12,500. That implies that before your salary is taxed, £12,500 must be taken from it, and the balance will be taxed. So you can earn up to £12,500 without paying any tax, £12,500 without paying any tax at all in the current year. Now, let me also talk about employment allowance. First of all, let me talk about national insurance contribution. Currently, employers are obliged to pay national insurance contribution on behalf of their employees. And the rate for employers is 13.8%. The rate for employees, because the employees also have to contribute, the rate is 12% in the current financial year. So, but you have to earn above what they call the earnings threshold before you pay national insurance contribution and before your employer pays on your behalf. For employers' contribution to be applicable, you have to be at least 21 years old. Now, because of Mr. Joe Block's special relationship with his company, we have devised a very simple tax avoidance scheme for him. Okay? Now, the company owes Mr. Joe Block nearly £76,000, and that is money that he has lent the company since it was set up. He has incurred a lot of expenditure on behalf of the company and then treated the money as a loan. Now, we have advised him to please do not, though he's put himself on a salary of £40,000 per annum, but we have advised him to make use of his personal allowance, tax-free allowance this year, because the way that tax-free allowance scheme works is this: if it is not used, it will be lost. It cannot be carried forward. So we have advised him we have advised the director to pay himself just enough to make use of that personal allowance this month, in order not to lose his personal allowance, and to supplement his income with loan repayment. He can withdraw some of this money that the company owes him, to supplement his income. And there will be no tax implication for the withdrawal, because if you lend your company money and you get that company to pay you money later to repay your loan, when it's able to do so, you will not pay any tax on that. So that is what Mr. Joe Blocks will be doing. He will pay himself just enough money to utilize his tax-free allowance and then top it up with loan repayment from his company, and there will be no tax implication at all. Also, we have advised him to pay himself up to £2,000 of dividend from his company's profit, because in the current year you can pay yourself up to you can earn £2,000 dividend without having to pay any tax at all. And Mr. Joe Bloggs has happily accepted that is our advice. And based on that, we have calculated his national, and we have prepared, he has used our advice to set up his payroll. So, another thing that has happened is, that I'm going to explain, is the tax employment allowance. Employment allowance is what is given in the UK to businesses. And at the moment, it is £4,000 in the current year. It is £4,000. So, what that implies is that businesses that are eligible under the scheme can reduce their employer's national insurance contribution by £4,000 in the current year. Now, but not all businesses are eligible. To be eligible, your employer's national insurance contribution must be less than £100,000. Okay? And you must not be a one-man band. What I mean by one-man band is this. You have companies that are set up by by their owners, and the only employee of the company is also the owner. So they call them personal service company. If you are in that situation, then you will not be able to apply for employment allowance because HMRC will not allow it. Okay? Public companies, most public limited public companies are not public organizations are not eligible. That includes the NHS. They cannot apply for employment allowance. So now, if I go to the payroll aspect the accounting aspect of payroll, okay? Now, based on our advice, Mr. Joe Bloggs has prepared April payroll. Okay, as you can see, April 2020 payroll. He has paid himself just enough to utilize his tax allowance, which is £12,500 per annum divided by 12. So his gross pay for the month is £1,041.67. So his company is also going to pay 13.8% of national insurance contribution on his behalf. And you probably heard about what they call auto enrollment. Now, business employers are legally obliged to employ to put their employees on what they call occupational pension, workplace pension. That has to happen automatically, but the employees are not obliged to accept to be on that scheme. They can withdraw or they can stay there. But in this case, Mr. Joe Bloggs is part of the scheme, so his company is going to contribute 7% on his behalf into a pension scheme. Now, he will also pay, just like the other employees of the company, another 7% into the pension pot, which will then be transferred to pension administrators to be invested on their behalf. Now, employees' contribution in the current year, national insurance contribution, is 12%. Okay? Now, if I go back to the employer side, the employer's contribution is an additional cost to the business. Employer's national insurance contribution is an additional cost to the business. Employer's pension contribution is an additional cost to the business. So, the cost of employing people is not just the gross pay. It includes employer's national insurance contribution and employer's pension. They are also called on-costs. So, in the current month of April, the total cost plus on-cost is £12,091.03. Now, payment by the employees themselves are not cost to the business because it has to come out of their gross pay. Okay? Employees' contribution, tax paid by the employee under the PAYE scheme, and the employees' pension are not cost to the business. Okay? So because it has to come out of their net pay, out of their gross pay. Now, the net pay, this is what goes into everybody's bank account on payday. You see, net pay. Mrs. Joe Bloggs will do her pay run and present this report to Mr. Joe Bloggs, who will then pay all this money into everybody's bank account because he has everybody's bank details. And on payday, this is what will appear in their bank account. Now, if I take you to the journal entry, the gross pay, you can see here, for the month is £10,541.67, and that will go into the gross pay expense account. Gross pay expense account. If I show you the journal, this is the journal that I prepared. As you can see, gross basic salaries expense account. You see, that will be debited with £10,541.67. As you can see, it is here. Okay? Code, nominal ledger code 2030. Employer's national insurance contribution at 13.8% is another business expense and will be debited to employer's national insurance contribution expense account. Expense account, as you can see. This is the total amount. That is £811.44. Okay? Now, employer's pension is another cost to the business. It will be debited to employer's national insurance contribution expense account. again, because another cost to the business. As you can see, I've done it here, and it's 737.92. That is the pension side. Now, the PAYE, that is employee payment of the PAYE tax under the PAYE scheme, is a liability to the business because it has to be paid over to HMRC. Okay, it has to be paid over to HMRC. So that it is again credited to PAYE liability account. It's a current liability until it is paid over to HMRC. The same thing goes for employers and employees contribution of national insurance contribution. They are a liability until they are paid over. Okay, pension contribution, employers and employees contribution, again, they are a liability of the business, and until they are paid over, and they've been credited to pension liability account. It's a current liability. The net pay is also a liability until it is paid into everybody's bank account. Okay, and it's been credited to net pay liability account. Now that brings me to the issue of employment allowance. Now, in total, it is £4,000 in the current year, but employers' national insurance contribution is £811. Okay, that can be used as employment allowance in the current month. So, Mr. Joe Bloggs will claim the entire £811.44 of employers' national insurance contribution as employment allowance. So, he will not have to pay it over to HMRC. But the right thing to do is to do your journal entry correctly. Okay? Actually debit the employer's national insurance contribution to an expense account, which is an additional cost to the business, and credit employers and employees' national insurance contribution to a liability account. Okay? Because that is a liability, but the payment must also be, there must be a special journal for payment for the payment. Now, what you then have to do to demonstrate that you have made that claim, you now need to do another journal entry. You debit the national insurance contribution account just to reduce your liability because you don't have to pay it out. Okay? And then you also have to credit your national insurance contribution expense account because that expense is not now going to be incurred because you are making that claim. Okay? So you debit and credit on both sides. First, you debit the expense account to indicate that you have calculated the national insurance contribution. But then you also have to credit it to indicate that you have made that claim under the employment allowance scheme. Okay? You also have to reduce your liability by the amount of the claim. Okay? The reason for this is this. There has to be an audit trail of what you have done. Auditors need to see what you have done, and your colleagues also need to see what you have done. And ideally, a letter from HMRC confirming your company's eligibility for the claim should be photocopied and attached to this journal for everybody to see. Okay? And if you leave the job, nobody stays in any job forever. Whoever takes over from you should be able to see what you have done. You have done your calculation correctly, but you have also made a claim under employer's national under employment allowance, the employment allowance scheme. Now, here is a summary of what happened. This is what a breakdown of April's calculation, April 2020 PAY calculation. Now, there must also be a summary. Now, this summary is a monthly summary which you will maintain on Excel and keep, for your record. Okay? One, your employer may call you at any time to say that, look, how much have we paid so far? My total employment cost, including national insurance and pension. You should be able to just give it to him like that without saying, oh, please allow me to run my report and I'll get back to you shortly. You should have this file somewhere. Okay? This file should be somewhere where all your colleagues can see it. If you go on holiday, people should be able to access it. Now, you should also indicate the employment allowance claim that you have made on this summary sheet, okay? Because you need to claim up to £4,000 in the current year, and you need to monitor the claim so that you don't go over, okay? Now, for security reasons, you may just want to just save this file as a read-only file. In other words, password protect it. But do it in such a way that people can open and see it, but they just will not be able to alter it because you don't want anybody to alter it, okay? Either by accident or design. You don't want anybody to be able to alter it. So, that brings me to the end of payroll. Let me just to recap. Now, employers, when you prepare your payroll, as I've just demonstrated to you, you've seen the journal, okay? The basic salary should be debited to basic pay expense account. Employers' national insurance contribution should be debited to employers' national insurance contribution expense account. Employers' contribution should be debited to employers' contribution expense account. Tax deducted should be credited to PAY liability liability account, because it's liability until it's paid over. Employers and employees' contribution should be credited to the contribution account, national insurance contribution liability account, and the net pay should go to net pay liability account. Now, when you make, let me do again. The employment allowance claim, I've demonstrated that already. Let me not go over that. But when it comes to making payment, when you pay, after you've paid everybody, especially on the salary side, net pay, you should credit just a simple journal entry, credit the cash book with the payment, and debit net pay liability account to reduce the balance to zero after everybody has been paid. Okay? The same thing goes for PAY and national insurance contribution. After you pay the HMRC, credit your cash book with a journal entry and debit PAY liability account and national insurance contribution liability account. The same thing goes for pension. I've seen one very funny situation whereby somebody will just raise a purchase, will just create an account in the purchase ledger for HMRC, and then raise a purchase order for net pay. They will just then they pass the purchase order into the employer in the purchase through the purchase ledger, and then debit that purchase order to the liability account, leaving no room for payment to go to. So double counting, a lot of mess. You really don't want that around you. So that is why proper supervision is extremely important, and nobody should be allowed to be alone to themselves in any work environment. Normal work environment, but you get that in a dysfunctional environment. So let's move away from that. We don't need to get into all that mess. Now I now need to move on to account closure. Now, like I said before, double entry bookkeeping is not an exercise that can go on forever. There must come a time when you have to bring it to an end and report the company's performance to various stakeholders, especially board of directors. It also, when you close the account, you need to close the account. And when you close the account, no entries will be posted in the period that you are closed. The whole process is guided by month-end, what they call checklist. And then the checklist that you will draw up, you will ask some of the following questions. First of all, you need to review your accounting policies. Now, accounting policies must be appropriate to the company's circumstances, consistently applied, and properly disclosed. You need to check your trial balance. Make sure the total and debit sides have agreed. Okay, this will happen automatically in a properly integrated environment. Okay, it will happen automatically. Okay, if I show you our own trial balance, which luckily for us has balanced. Again, as you have approached, you are now at the end of the month. You have now closed. You are close. You are trying to close. This is now the time for the accountant to take over, and then really convert the trial balance into a worksheet, or what they call extended trial balance. When it becomes an extended trial balance, then it starts looking like this. You see, this is the extended trial balance here. As you can see, there is a column for adjustment, okay? Adjustment for error corrections and so on and so forth. Another column for accruals, where you accrue transactions, okay? I'll talk about that shortly. Prepayments, another column for it. And then there is also room for profit and loss account or income statement, which is our report, really. Then also the balance sheet. Okay, this is your extended trial balance now. The accountant has now taken over. The bookkeeper has signed off. So this is what proper month-end closure. So you continue with your questions. Okay, you have to as part of your month-end close process, you have to look at your debtors. Look at all the invoices that have been long outstanding, unpaid. This will also help you to uncover invoicing fraud. If an invoice has been outstanding for too long, it may well be that, well, not enough effort has been put into chasing the customer for payment, but it could also be a dodgy invoice. When services have not been provided and people just raise invoices just to cover somebody's non-performance. If the invoice is still there and has not been, eliminated by, fake payments passing through the cash book, then the invoice will still be sitting down there, and you can then ask questions to find out what is going on. You need to then close your purchase ledger for the month and then open it for the following month, so that invoices for the following month can be processed while you are carrying on with your month-end closure. Okay? Any invoice that misses the deadline will be accrued. If you you should also have to close your sales ledger and then open it again for the following month, so that invoices for the following month can be processed. Any sales invoice that missed the deadline will be accrued for. Okay? Services that have been provided for which you have not billed your customer will then be treated as an accrual. You also have to do your stock take, carry out stock take, pass the stock sheet to the accountant, who will then add monetary value to every item, and then pass everything through the nominal ledger. Do your reconciliation, bank reconciliation, credit card reconciliation, nominal ledger reconciliation, and so on and so forth. Then you then have to come up with a timetable. Something like this, a timetable, monthly timetable. You see, this is the monthly timetable for account closure. This, commencing from the month of May, you say on the 1st of May, all timesheets that relate to the month of April should be submitted on the 1st of May, or it will be processed as part of a May's timesheet, but then accrue for at the end of May, at the end of April. Close the debtors ledger, close suppliers ledger, do your check run, expenses deadline, control account reconciliation, and then you close April. And say on the 11th of May, the month of April will be closed. Once you have closed the month of April, you then have to start drawing your management reports. Okay? Actually start making adjustments. Like I showed you earlier on, this is when you start making your adjustments. You start making use of your extended trial balance. Start preparing your accruals list, do your prepayment, income statement will be calculated automatically once you have done everything properly. So that brings me to the end of the video. Now, in the next video, I will talk about, we deal with accruals and prepayments and so on and so forth. So, thank you very much for listening, and thank you very much for your time. Please do like and subscribe. Thank you, and I see you in my next video. Okay? Don't forget to click the subscribe button. It won't cost you any money. Thank you. Bye-bye.